Greetings, and welcome to the High Flying Tutors Academy channel. Today I'm going to do a practical accounting question, a topic called CVP, cost to volume profit analysis. Okay, so as you see the question right there, they say assume business I provide the following information to you. Details that they provide: units sold and produced 9,000 units, sales 315,000, total direct material cost 45,000, total direct labor cost, variable cost 90,000, variable manufacturing overheads costs 18,000, and then fixed manufacturing overheads costs and fixed administration costs. All right, and then number one, you are required to calculate the total variable cost. Number two, variable cost per unit. Number three, total fixed cost. Number four, calculate the break-even point in volume or units. Number five, calculate the break-even point in rent value. Number six, test your break-even point. Number seven, calculate the units sold if a profit of 35,000 rent is expected by the owners of the business. So that's what we are going to do right now. All right, so let's start with this session and answer the questions. So we are going to start by calculating the total variable cost. Let's go to our answer sheet right there. Number one, we are required to calculate total variable cost. All right, so total variable cost there, we are just going to go to our question, identify items that makes us to qualify or that are going to help us to calculate total variable cost. All right, so our total variable cost, obviously we're going to look at items that are going to make us or help us to calculate total variable cost. So number one, we have item total direct material cost. It's a variable cost. I see they did not indicate it whether it's variable or not, but it is a variable cost. So that means as a student, you need to know what types of items are variable cost, or what items are going to help you to calculate variable cost. All right, so obviously total direct material cost is a variable cost item. Total direct labor cost, the variable they indicated, also variable manufacturing overheads cost there. So for us to calculate total variable cost, we're going to add three items. Number one, we're going to take 45,000 for direct material cost. So is equal to 45,000 of the direct material cost plus 90,000 of the total direct labor cost variable. 90,000. All right, 90,000 right there, 90,000. Okay, and then you add as well the next one, which we identified the three, right? So variable manufacturing overheads of 18,000. All right, 18,000, right? And then now, how much is your total variable cost? Let's put that on our calculator. And see how much we are getting. It's going to be 45,000 plus 90,000 plus 18,000, right? And then I'm getting 153,000. That is our total variable cost. All right, that is our total variable cost. And then number two, they said we must calculate what? We'll go back to the question just to identify that. So number 2, they say to us, calculate variable cost per unit. Variable cost per unit. Variable cost per unit. Variable cost per unit right there. Variable cost per unit. So variable cost per unit is going to be equal to total variable cost divided by sales units or number of units sold. Sales units or volume or sales volume. Sales units or volume, all right? So now it means we need to go and look for number of units sold, because our total variable cost is right there, up there. We have is 153,000 rand, okay? And then you divide by the number of units sold. Let's go and check our number of units sold. The number of units sold and produced is 9,000. So we're going to divide by 9,000. All right, so 9,000 units. 9,000 units. And then how much is the variable cost per unit? How much is the variable cost per unit right there? Let's see. Let's put that on our calculator. 153,000 divided by 9,000. I'm getting 17. All right, 17 rand. That is the variable cost per unit. All right, and then let's move to the next question. We are done with question number 2. Let's go to question number 3. Let's go to question number 3. Question number 3. Let's go to question number 3. Question number 3, they say we must calculate total fixed cost. Total fixed cost. All right, total fixed cost. Total fixed cost. So our total fixed cost is going to be these two. All right, we're just going to add the 2, which is going to be 50,000 plus 75,000. All right, so let's go there to our answer sheet. We're going to calculate total fixed cost. All right, so our total fixed cost, we saw these 2 fixed, which number 1 is equal to 50,000, and then plus number 2 is number 1 was fixed manufacturing overheads cost. Number 2 is fixed administration costs, 75,000. All right, so we add 75,000, and how much are we getting right there? How much is our total fixed cost? How much is our total fixed cost? All right, our total fixed cost is going to be 50,000 plus 75,000, which is 125,000 rand. 125,000 rand, okay? And then that is your fixed cost, total fixed cost right there. All right, number 4, I see on the question there it is not indicated, but I want us to go and prepare our marginal income statement. Our marginal income statement. All right, I want us to go and prepare our marginal income statement. Let's make our number 4 a preparation of our marginal income statement. Let me do this. Marginal income statement. All right, marginal income statement. Marginal income statement. So our marginal income statement, when we prepare it, we are going to insert a table. We're going to insert a table there. All right, and then this is going to be our marginal income statement there. So let's do this. All right, so here we are going to have amounts per unit, amounts per unit. All right, so this side we're going to have amount per unit. Amount per unit we refer to like sales per unit, marginal income per unit, variable cost per unit. That's what we're going to have this side. Okay, and then on the other column we're going to have total amounts in rent again. So we're going to have total amount in rent. Remember, total amount all right, and then now this is what we are going to do. Remember, we are preparing marginal income statement. So the format for the marginal income statement is sales, you less variable cost, and then you're gonna get marginal income. Okay, and then after that you're gonna less your total fixed cost, and then you get net profit. You get net profit right there. All right, so we need to calculate that, okay, until we get here. All right, so let's see. Okay, so now we need to calculate our sales, okay, and then we have to calculate our variable costs, our marginal income, so now let's go and calculate our sales. Number one, let's go and calculate our sales. When we read our question, they say our sales is given right there is 315,000. 315,000. So our sales is total sales. That is total sales. We're gonna put it under total there, 315,000. Okay, and then there we have to less our variable cost. Our variable cost is there. Number one, we have calculated it is 153,000. Okay, it's 153,000, and then for us to calculate or to get our marginal income, we have to say 315,000. We less our variable cost 153,000, and then I'm getting 162,000. All right, and then we have to subtract our total fixed cost. Our total fixed cost is 125,000. All right, and then that means we have to say 162,000 less 125,000. Right, and then I'm getting a profit of 37,000. All right, so that is our marginal income statement there. But remember, we need to calculate amounts per unit. Amount per unit there is going to be amount per unit. We're going to say 315 of sales. You divide by the number of units sold, which is 9,000. How much is the selling price per unit there? So it's going to be 315,000 divided by 9,000. All right, and then I'm getting a selling price per unit of the 5 rand, okay? And then also we have to calculate our variable cost per unit. It was number 2. Our number 2 we have calculated is 17, all right? And then we have to calculate our marginal income per unit. Our marginal income per unit is going to be 35 rand minus 17. Then I'm getting 18 rand. 18 rand. That is our marginal income per unit. All right. And then we are done. We just have to end there in terms of the amounts per unit. All right. And then from there, we can go to number 5. We can go to our number 5. We can go to question 5 because number 4, we were supposed to prepare our marginal income statement, and there it is. We're prepared. All right. So let's go to the next question. The next question, they say to you, calculate break-even points in volume. Calculate break-even point in volume or units. So to calculate break-even point in volume or units, let's go there. They say to you, calculate what? Break-even point in volume or units. All right, break-even point in volume or units. So how do you calculate break-even point in units? To calculate break-even point in units, you are going to say total. The formula it says is equal to total fixed cost divided by marginal income per unit. Marginal income per unit is equal to, so our total fixed cost is 125,000, and then we divide by marginal income per unit, which is 18 rand. Okay, 18 rand, right? 18 there, 18 right there. And then how much is our units to break even? Let's put that on the calculator. 125,000 divided by 18, and then I'm getting 6944, so maybe we can say 96944 or 6945, because we cannot have a unit of half, so we can just say it's 694. Let's just say 6945, all right, because you cannot have a unit half. So the units to break even is 6945 units. All right, these are the units to break even, or the volume to break even. All right, so we are done with number 5, question number 5. That's how you calculate your break even point in volume or units. All right, so number 6, I want us to go to number 6. Number 6, what are they saying? Number 6, they are saying calculate break-even point in rent value. Break-even point in rent. So we are going to calculate break-even. We're going to calculate break-even point in rent value. All right, break-even point in rent value. So break-even point in rent value is the simplest one. Once you have break-even point in units, it's easy, because the formula to calculate break-even point in rent value is going to be break-even point in units or volume multiplied by selling price or sales per unit, sales price or selling price per unit. All right, so let's calculate that. So it means we are going to say it means we are going to say number of units, which is 656,96945 units, okay, multiplied by 35 rand, which is selling price per unit. 35 rand, which is selling price per unit. All right. All right, and then how much is our break-even point in rent? How much is our break-even point in rent? Let's put that on the calculator. So it's going to be 6945 multiplied by 35 rand. So I'm getting 243,075. That is your break-even point in rent. All right, and then we are done with number 6. Now let's go to number 7. Let's go to number 7. Number 7, let's go and check what are they asking. On number 7, they say to you, test your break-even point. Test your break-even point. So we need to test our break-even point. Remember, when we test our break-even point, we must get our answer must be 0 to show that we're not going to make a profit or we're not going to make a loss, because a break-even point is a point where the business sells a certain number of goods and then you find that they didn't make a profit or a loss. That is a break-even, where the business sell and they did not make a profit or did not make a loss. They just covered all the expenses and there's no profit and there's no a loss. All right, so let's go and see how do we calculate, how do we test our break-even point, because number 7 want us to test our break-even. Test break even point. Break-even point. Test our break-even point. So to test our break-even point, it's easy. To test break-even point, this is how we test it. I'm gonna give you the formula, and very quite easy. So for you to test the break-even, you have to have the break-even point in rent value. All right, you less variable cost for break-even, variable cost for break-even, variable cost break-even, variable cost break-even point, and then you less your total fixed cost. All right, so let's see what do I mean by this in terms of numbers. Okay, so now already we have break-even point in value, in rent value, which is 245 or 43,075. All right, and then we have to minus our variable cost break-even. Variable cost break-even, how are we going to calculate our variable cost break-even? We are going to say variable cost per unit, which is 17 rand. Okay, we multiply by numbers to break even, which is 6,945. Okay, and then we're gonna minus our total fixed cost of 125,000. All right, and then let's proceed with our calculations. We are going to say 243 0.075 minus let's see, 17 times 6945, and then that is 18,118,065. All right, and then we're gonna minus our 125,000. all right, and then let's see how much are we getting right there. Are we getting 0? Let's see. 243,075 minus 118,065 minus 125,000. I'm getting 10. I guess this 10 is supposed to be 0, ne? Because the method is correct. The reason why we're getting 10 is because we have rounded off our units there, because they were supposed to be 6944, something 44, right? So that's why. But most of the time, if they give you a question where it's accurate, the answer must be 0, because you didn't make a profit. Here it seems like you've made a profit of 10 rand, but the reality is that I gave you a right method and we got 10, no problem, because of the round off, but the answer must be 0 always, all the time. If you don't get 0, it means at least you must be closer, not that far, and maybe it must be affected by the round off always, all the time, if like you don't get 0. All right, so that is our break-even point. We're testing it like that. And then let's go to the next question. Question 8. Question 8. So our question 8, let's go and see what are they saying there. I'm gonna do it on the next page there. All right, our question 8, which is the last question, they say calculate the units sold, or the units to be sold. Let me say to be sold if a profit of 35,000 is expected. All right, by the owners of the business. So let's do so. Calculate the units to be sold. So I'm just gonna take this one the way it is, or I'm just gonna say I'm just gonna copy it to the answer sheet there, number 8. Right, our number 8. So we are calculating what the profit, the profit there, 8, the profit to be the units to be sold. I mean to say, we are calculating the units to be sold if a profit of 35,000 is expected by the owners of the business. All right, so now this is how we are going to do it. So what is the formula? Number 1. So the formula is total the formula is going to be total fixed cost. Usually we put in brackets so that we can do proper calculations, right? So it's going to be total it's going to be in brackets there, total fixed cost plus expected profit right, close brackets, divide by marginal income per unit, divide by marginal income per unit. All right, so now let's get to it. So how much is our total fixed cost? Our total fixed cost there is 125,000. Our total fixed cost is 125,000. All right, and then you add, remember, in brackets. All right, you add expected profit. Expected profit is given there, is 35,000, close brackets, and then you divide by marginal income per unit. Your marginal income per unit is 18 right there, right? We divide by 18. Right, let's see how much is the answer there. So it means we need to do these calculations. 125,000 plus 35,000, and then I'm getting 160,000 right there. And then I'm going to divide it by 18. How many units there? How many units that we must sell to make a profit of 35,000? All right, so divide by 18. I'm getting 888 something, so you can say it's 8,889 units to be sold to make a profit of 35,000 rand. And then you can also prove it. Okay, let me just add number 9. Number 9, let's prove this. To prove it, to prove this profit of 35,000, you need to prepare a marginal income statement. Proof for the number of units to be sold for a profit of 35,000 rand. All right, so let's prove. To prove this, we need to prepare our, just to check if we are right, we need to prepare our marginal income statement. All right, so this is, I can just say this is 9.1 maybe, but it's our, we need to prove. To prove, we need to prepare what? Our marginal income statement. So let's see quickly if we are going to manage this one. If we are correct, if those numbers are right, let's prepare our marginal income statement quickly there. All right, see. This side is going to be amounts per unit, and then this side is going to be total amount. Total amount. Right, total amount. There we go. All these total amounts, they are going to be in rent. Right, so now remember our formula for marginal income statement. This is marginal income statement. Marginal income statement there. All right, so let's see. So our marginal income statement formula is sales less cost of sales and then you get marginal income, and then you're gonna less total total fixed cost, and then you get net profit. So let's see if we're gonna get that net profit. All right, let's see. In brackets there, we're gonna say selling price per unit, which is 35 rand. All right, our sales per unit is 35 rand, right? Yeah, there we go. It's 35 rand. Okay, so we're gonna say 35 rand multiply by 8,889. Okay, so let's see how much are we getting. Let's put that on the calculator. How much is our sales? 35 rand multiply by 8,889. I'm getting 311,115. All right, and then our, why am I saying cost of sales there? Here it must be variable cost. Variable cost, not cost of sales, variable cost. Okay, so remember our sales per unit is 35. Okay, and then our variable cost per unit is 17, right? As we calculated up there, 17. So 17 there, and then our marginal income per unit is 18. Okay, and then now let's calculate our variable cost. Our variable cost total is going to be 17 rand. Okay, 17 rand multiply by number to be produced, 8,889. All right, and then let's see how much is it there. 17 times 8,889. So I'm getting 151,113. Okay, and then this is your variable cost. This is your variable cost, and then now we're going to calculate marginal income. So your marginal income is going to be 311,115 minus 151,113, and then I am getting 160,002. Okay, and then remember our fixed cost cannot change. Remember, our fixed remains the same. Fixed means it's fixed, it doesn't change, right? So we're gonna less our fixed cost, our normal fixed cost. So our normal fixed cost is this one, 125,000, right? So 125,000, and then we close brackets. Let's see. So 160,002 minus 125,000. 125,000. So we are getting a profit of 35,002 because of the round off. But you can see because of the round off, there's an increase of 2 rand there, but you can tell that we are all doing the right thing. So these are the correct numbers. We have proved them there, that after selling this amount of units, we will make a profit of 35,000. All right, so this is your CVP. I've tried my best to put things in order and try to make sure that things follow each other accordingly. So thank you for watching, and please do not forget to subscribe, like, and share. And also remember, this coming October, we are running a promotion in our private sessions, where we are saying you pay only 250 in October. We're going to teach you throughout October until the end of November, or until you finish writing your examination. So for November, you only have to pay for the preparation of your exams. I hope I see you joining us soon, and salute.